Want to sell your company on the stock exchange? Initial public offerings taking too long and costing too much? Why not go through a special purpose acquisition company instead? It's a process where an experienced investor, named the sponsor, will put together a shell company with no assets that investors invest in called the SPAC. The sponsor will then IPO the SPAC, which will be faster and cheaper as the SPAC doesn't have any assets. The now publicly traded SPAC will then acquire a private company, at which point the private company will be listed on the public market, but skipped the IPO process. While SPACs are beneficial for private companies, they are a much riskier prospect for investors. Most sponsors cannot legally disclose what company they plan on acquiring, therefore investors are investing purely on faith in the sponsor. Understandably, this can result in underperforming acquisition targets or even fraudulent ventures. As with all investment options, the investor should always do their research and take steps to mitigate the risk.